Yeah, and even in 20 of the last 50 years, silver's at least been 2% the price of gold, even in non-bull market years.
Hmm.
You even go from 1.2 to 2 is an enormous gain of silver doubling versus
Right.
gold, you know. Uh, anyway, I think we're sitting on a tender box. It's technically definable, and that spread is very important because it was that spread breakout, similar situation we have now, pending, that occurred back in 79, 5 months before you quadrupled, and occurred starting in September 2010 before you doubled in half in the next 6 months. We have the
Okay.
same technical situation, the tender box, in other words. It's set up. And when we run momentum of that spread, not just the spread itself, but run it against like a 10-month average, or we plot it as an oscillator, you're at the breakout level right now. You're pushing right at the final threshold level. So momentum usually leads, in this case, the spread. So we're about as highly convinced as we've ever been on any market move that this is about to happen. We're waiting on that trigger level. And I think it's probably going to occur this coming month, or this month. Yeah, well, as you said, they had a massive run. I mean, look at what like GDX did over the last 5 months. Off the page, nothing in the stock market matched that.
Right.
Okay. And naturally, they take a breath. I mean, like GDX, the 2011 high, I think was 60 something, mid 60s. We went up to 80 in a heartbeat, and we pulled back into the high 60s. I think right now we're around 70 something. I mean, give it a break, okay?
Mhm.
Silver, same story. It's been outperforming gold at least over the prior 5 months or so, not over the last couple of years, and surged massively. Percent-wise, it went from the mid 30s to 53. Boom,
Mhm.
So it has a sharp pullback, fine. In fact, most of that pullback occurred a few weeks ago, and since then it's just been doing this. So it's not really correcting anymore. It's in fact, we're about to put out a short-term technical report on silver, not focused on the big picture, but just what's going on right now. And it's basing. When we run weekly momentum, day by day action against a 3 week average or a 15-day average of weekly momentum, it's built a base. In other words, you look at the momentum chart and say, hey, that's a base. You don't see it on the price chart, but you see it on momentum. And it wouldn't take but 0.5% or so above where you're trading right now to close out tomorrow or any day next week. And the momentum says, okay, you're going up out of here. Okay, if you
Mhm.
didn't buy the dip, sorry, goodbye. Um, and it sort of made sense in a way. You think about it. Pardon me, there's a lot of idiot investors out there. People who buy late, they don't believe it until it does something outstanding. Well, so silver took out the prior highs of 50 bucks, 50 bucks in a massive run. They weren't in there then. Okay. It gets out above 50. They say, oh, I got to buy that. Okay. Well, after what, 5 months of verticality, then now they're going to join in. It's appropriate you should bag them. Okay.
Mhm.
At least for a short term. Teach them a lesson. Don't buy late. Buy at
Right.
appropriate times. And don't judge the market by the fact that you're losing money because you bought late. Okay. Uh, anyway, I think it's about over. Silver drop. I think it's ready to go back up, and I think you're likely to see that either tomorrow or next week sometime. You'll see an upturn that's sufficient to say, oh, back up. Um, and then game's on again. But we can get into it in a minute if you want to, but there's a bigger metric in play here to watch rather than silver price or gold price.
Price action alone often hides what's truly building. When analysts map silver's daily behavior against smoothed weekly momentum, a quiet stabilization becomes visible, an early reversal signature not yet obvious on conventional charts. The metal no longer shows active correction behavior. Instead, it has begun compressing in a tight pattern that typically precedes sharp directional moves. In fact, only a modest push above current levels could flip short-term momentum back into bullish territory. Historically, these shallow dips after a breakout trap late buyers and reward those who entered early. The technical landscape now resembles a market pausing, then preparing for its next leg higher.
Let's talk about that. What's the bigger metric that you're looking at, the bigger
Okay.
indicator?
It's the silver versus gold situation, the performance. Well, both of them have been going up. We had a big surge in both in 2020. Okay.
Hmm.
Silver like doubled from 15 to 30, and gold went up 40, 50%. Silver beat gold during that surge. But ever since a peak spread reading between silver and gold in 2021, I think it was January, silver performance has declined relative to gold. They've both gone up, both have been very rewarding, but silver hasn't matched the percent gain that gold has produced since that point in time. But when you examine the spread chart, it's like it's price versus price. We divide an ounce of silver to an ounce of gold, express it as a percent. And there is a very clear ceiling that this spread chart, this relative performance chart, has built since last 3 years. Bangs at a certain level, backs off, hits a certain level, backs off, comes back up near that certain level again with intent. It's right now the silver divided into gold is worth about 1.2%. Okay. You get much over 1.3% and the lid comes off. You'll then silver will rush to the upside in relative performance terms. And anytime this has happened before, two prior major examples were in 79 to 80 bull move, in which silver in the last 5 months of that move quadrupled in price. Quadrupled in price.
Right.
5 months. And in the last 6 months of the run up to the April 2011 peak in silver around 50, it turned up in September of 2010 versus gold. Spread chart broke out. And that's when silver went berserk. It went up 2.5 fold. Okay. Well, okay, we're at $50 area. You want to go up 2.5 fold? You want to double or so? Okay, it could be well over 100. Okay, and if you match the 79 move, you'd be 200. Okay, now there's other reasons. And again, the signal indicator that warned at those times that something berserk was going to happen was the spread chart.
Really?
Yep, it wasn't the fact that silver was already going up, gold was already going up, that they'd already spoken. I'm in a bull trend, okay?
Sure.
What told you that silver was going to go ape? The spread broke out.
Really?
And it caught up. And now we have even more pent up technical and fundamental rationale to blow silver through the roof, to catch up to gold in a longer term perspective. Because if you go back into the bull trends, 79, 80, 2010, 11, the tail end of those, silver surged to 3.5% or more of the price of gold. Well, heck, we're 1.2. Ooh. All you do is match those, and you put the number on it. Plus, gold's going to be going up the same time. And the other thing, all these people will say, "Oh my gosh, gold and silver had a huge move. They got to get up. It could be a top, or it's exhausted, etc." We're only 4-fold increase in gold since its last bear low.
Right.
The two prior bull markets, 76 to 80, 2001, 2011, different time spans, 8-fold moves.
Yeah.
Okay. Okay. Why is it overdone? And then when you look at silver, we ran some studies recently arguing for a quote, new reality. And the reality that's prevailed in silver for 50 years has been 50 down, 50 down, 50. You're stuck in a box. Well, if you go look at copper or even lead, okay, and go back into the 70s, 1980s, 2000, they lived in a range, much like silver's lived in a range for 50 years. They were in a similar range. In 2005 and 6, copper broke out of that price range it had been in, into a new reality. And in getting to the new reality, it quadrupled in price in a couple quarters.
The most important indicator is not gold's price or silver's price. It's the relationship between the two. When silver begins outperforming gold in a structural way, major bull markets often accelerate dramatically. Today, the silver-to-gold performance ratio is pressing against a resistance ceiling that has held for nearly 3 years. A sustained breakout above roughly 1.3% would signal a decisive shift. silver entering a stronger phase relative to gold. The last two times this spread broke out, 1979 and late 2010, silver exploded, rising fourfold in months during the first case and more than doubling in the second. That setup is reappearing now.
And now, since then, copper's lived in a new range that if you take the average of the last 10 years of price action or so in copper and compare it to that prior range, it's like 4 times the level of that range. Lead did the same thing, but in 2007. It lived in a range for multiple decades, broke through it, and literally 2 quarters quadrupled in price, and in his sense lived in a much higher zone of reality. How come silver's still stuck in the same zone of reality that prevailed in the 70s, the 80s? What's going on? Gold hasn't lived below the 1980 high, which was 850. It went to a 1900, then pulled back, then now it's 4,000. How come silver still contained below the 1980 high? Well, I mean, I'm not going to try to explain, but it's clear something's wrong.
Yeah.
And it could be that, the silver has been artificially suppressed by banks, perhaps motivated by the central bank, urging them to, and whatever the reason, it's not done what so many commodities have done. Like look at the price of bread, for example, okay? And what's going on here? The point is that when they go to a new reality, they don't crawl their way up there. If they've made a mistake by staying low too long, when they break out, they say, it's over.
Yeah.
And they go to a new reality in a lightning bolt. And most people miss it. We're arguing that technically silver is now poised to go into a new reality. And I'm suggesting that once you break the silver gold spread out, at that point, count about 6 months, and I bet we're well over 100 and maybe 200 in that time span to go to a new reality.
Spread breakouts have historically preceded the most dramatic silver rallies. In previous super spikes, silver didn't merely follow gold, it multiplied faster, reaching up to 3.5% of gold's price at peak extremes. Today, the market sits at just over 1%, far below historical norms. Even a return to silver's typical 2% level would represent a massive revaluation. But what makes the present moment remarkable is the amount of pent-up pressure. Technical oscillators that track long-term spread momentum are now pressing against their final breakout thresholds. In past cycles, once these levels gave way, silver entered a hyper-acceleration phase lasting several months.
Yeah, and even in 20 of the last 50 years, silver's at least been 2% the price of gold, even in non-bull market years. You even go from 1.2 to 2 is an enormous gain of silver doubling versus gold, So anyway, I think we're sitting on a tender box. It's technically definable. And that spread is very important because it was that spread breakout, similar situation we have now, pending, that occurred back in 79, 5 months before you quadrupled, and occurred starting in September 2010, before you doubled in half in the next 6 months. We have the same technical situation, the tinderbox, in other words. It's set up. And when we run momentum of that spread, not just the spread itself, but run it against like a 10-month average, and we plot it as an oscillator, you're at the breakout level right now. You're pushing right at the final threshold level. So momentum usually leads, in this case, the spread. So we're about as highly convinced as we've ever been on any market move that this is about to happen. We're waiting on that trigger level. And I think it's probably going to occur this coming month, or this month.
Unlike copper, lead, and even gold, all of which broke out of decades-long price ranges and never returned, silver has remained stuck inside a band established nearly 50 years ago. Other industrial metals leapt into new realities, quadrupling in price in mere quarters once their ceilings shattered. Silver, in contrast, still trades below levels hit in 1980, an anomaly unmatched by major commodities. Whether due to structural suppression, market distortions, or simple neglect, the metal has lagged far behind. When assets finally escape artificially low ranges, they usually don't rise slowly. They reprice violently, often leaving most investors behind.
Okay, so really for investors, if they were waiting for, or traders, if they were waiting for an entry point, this is just a gift, really, just this recent sell-off, a gift
This
for.
is, yeah, in other words, what that spread is saying, and I'll mention another spread in a minute, is it's just begun.
Hmm.
That's what the spread says. It's
Hmm.
not saying I'm over. It says it's just begun. And when we go to that new reality in silver, you're not going back to 50 again, okay? You're
Hmm.
going into a new reality. Oh, sure, after the initial surge, you'll probably have a sell-off, but that's not the issue. The point is you're going from one reality to another, and likely that reality could be 3, 4 times higher than where you've been for the last 50 years.
Technical evidence suggests silver is nearing an inflection point similar to those of 1979 and 2010, moments that preceded historic, fast-moving advances. Momentum models tracking the silver-gold spread are hovering at breakout territory, implying the trigger could occur within weeks. For investors waiting on a clearer entry, the recent pullback may be a rare opportunity rather than a warning. If silver transitions into a higher price regime, it is unlikely to revisit its old ceiling of $50. Instead, it may establish an entirely new base, potentially 2, 3, or even 4 times the levels that defined the past half-century.